Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a great day. We're taking a look here at Bitcoin, seeing what's going on. We're going to talk about this key level resistance we're trending towards here, and obviously just a quick summary of what happened there. Simple way to understand it is the tariffs for Mexico and Canada created a pretty big problem yesterday when a lot of the futures opened yesterday, and they opened in the red. Everything started to dump, and here today, significant recovery, partially because, and if I'm not, correct me if I'm wrong, but if I'm not mistaken, they're pausing the tariff conversation here for one more month. So again, that's potentially what's going on there. But regardless, this is a massive fundamental catalyst. You can't account for this. But thankfully, our community was heavy on shorts, and we didn't take a single long going into this because there's no. I mean, if you saw my analysis on Saturday, there's no bullish convergence. There's nothing there, right? Bitcoin wasn't going to bounce. It was just simply doing well for the moment because of the Fed meeting. Anyways, 100% on SCI short there, Solana 58%, a second Solana short at 54%, then of course Bitcoin hit closer to about 40%. That's not quite as large of a profit because we secured profit a little early at the $100,000 range, just to ensure that we didn't get, in case that level held and the price bounced, which it didn't, we walked away in the green there. So again, sometimes you got to kind of make that call. So let's go ahead and see what's going on here. We'll start with the larger time frames and work our way down after analyzing the back-end data here. So when we look at liquidation, we're going to see a full sweep of all liquidation locally and long-term. Again, that $94,000 mark was that heavy concentration that I mentioned. Add to your spot bag in that range, or just in general, expect the price to hit that level eventually. While I didn't expect to happen like a Saturday/Sunday, I was expecting a retest of 100,000 and then the price pull back sometime this week. We didn't retest at all. We just continued lower, and now we're attempting to retest that $100,000 range. So we're going to talk about that resistance and why it may not be advantageous taking along into that, but also just generally speaking where we're at with liquidation. So let's go ahead and make this a little easier to see. And if we look here, we can see, of course, we got some shorts at the 100,000 to 106. 106 is that heaviest concentration. So we closed above 100,000, maybe over the 100 to 102,000. That's a very significant resistance range. Then we'd probably want to be, flipping long potentially and considering 106K as the next target. But you got to recognize 100,000, 99.7, right in that range there. That $97,000 to $100,000 range is a pretty significant, was a pretty significant support previously. Therefore, we can presume it'll be a significant resistance, right? And I'll explain the reasons why that is the case, but at this point, just know that the bullish, we're back on track here where the liquidation delta is flipped bullish here. So there's a good sign basically letting us know that we have more volume, in longs versus shorts, which makes sense, obviously, because that was a flash sale there, 94,000. We can see heavy interest here. So when you see this big old chunk right here, this tells me that we got some pretty big whales behind them. Okay, so whales are heavy at 94,000. So long story short, there is if the price comes back down to that 94K range, we'll probably see some support there. Okay, either way you look at it, with open interest, you can see a lot of folks are trying to, just kind of getting in as the price goes up, and kind of just average out between 96 and 98. The key takeaway here, though, is if you look at the macro, that 105 to 106K range is still pretty heavy. Unfortunately, there's a lot of late longs at that level, which I insisted to my community, do not take a long. We're flipping shorts, and I'm glad we did. We even held some shorts open from prior to that as well, because again, you just kind of got to trust the system. That was very much of a fake pump. You saw my analysis from, I think it was Wednesday before I left for the hospital for my son being born. You would know that was kind of a fake out there. Either way, hindsight's 2020. I'm not telling you that we called it, but the key takeaway here is that we were heavier on shorts. While we didn't expect the price to go down this low, I honestly don't usually anticipate the price coming down that hard. The anticipation was that for that $100,000 range to be retested from that 106K. All right, so let's take a look here at the larger time frames, kind of see what's going on. We're going to start with the monthly and work our way down. And when we look at our monthly, we always want to recognize that we're still in pretty decent shape in the overall sense. Again, these kind of corrections happen all the time, folks. It's a bummer it happened like all instantly at once. But the general consensus here, if we look here, 105 down as low as 94,000. That's the range that we're in right now on the monthly as far as candlestick closures. While we wicked below that, we never truly closed below it. And we're not down below it right now, so we're in pretty good shape still, right? So again, we start closing consistently below 94,000. I think we're going to have a different conversation. Between now and then, the overall sentiment here is not terrible. We do have a divergence kind of letting us know the shift in momentum is occurring. You got to recognize that, we could very well pull back because of that. But again, that's one indicator among a sea of majority of bullish signs. But keep in mind too, though, when it comes to bullish signs on the macro, specifically the monthly or the weekly in this case, we can see that with it being a larger time frame, moving average, things are going to be a little slower to respond. So again, this is not indicative of a further upside or downside, just kind of giving us a consensus that we're mostly still trending higher, even though we totally could still go lower. All right. I know it sounds kind of ridiculous, but some people put too much emphasis on the macro, and I think it's important to recognize. But I think the middle, the midterm timeframes, me personally, 4 hour and the daily, those are probably the more impactful ones because you're going to be able to see those weekly or monthly movements, right? If you look at the monthly time frame, that's like typically that's like an annual outlook, if you will, right? You're looking at the full calendar year. Right now, though, to be able to see and estimate where we're going to go next, I think the daily time frame is probably one of the better gauges here. So here's one I want to talk about really quick, and this doesn't mean you want to kind of consider shorting per se, but I did talk to my community yesterday briefly about the thought process of shorting at the 100 to 102K range. And the reason why is because we have a lot of confluence. We got this resistance here at about 99,700. Keep in mind, it's not like a specific candlestick closure, but I've noticed on smaller time frames, 99.7 is like a really very regular number that's occurring on closures on smaller time frames. So that's why I have that there. It's also the 0.5 fib level, really close to 100,000, which is a psychological support or resistance. So I think 100,000 should propose a bit of a rejection here for us, or somewhat of a resistance. So I'm not expecting it to just us to blast straight through that. If we do, awesome, that'd be great. We just want to get a solid closure above that, and maybe consider waiting a day or two before taking a long, right? Taking a long right now doesn't make a ton of sense where we're at, just because we're really close to that resistance range. If you caught along at 94, 95,000, while that was very irresponsible, it still makes sense considering how far things were overextended. That's a different story. Adjust your stop loss higher, make sure that you secure profits. But at this point here, we take a look, we're under 50 on the RSI, we're under, money flow index is pulling back. Of course it's going to. We had so much money coming out of Bitcoin yesterday, it's ridiculous. Same thing here as well with stochastics trying to swing up, MACD's diverging. These are all unfavorable signs generally, right? We want to be above the 20 and or the 50-day SMA, which is right here in this range of 100 to 102,000. So again, a lot of confluence of the 100 to 102K range, leading me to believe that's going to be a resistance range. So hypothetically, the price gets to the $100,000 range, I might consider a short entry here and a secondary short at 102, as far as secondary short entry, of course. Because if you know me at all, you'll know that I like to average into my position. I don't like to go all in on the first go, right? Again, you miss some opportunities there, but you generally are going to be getting some skin in the game and having some favorability there. Either way, the daily time frame is still not looking good. I don't know who you're listening to or watching or whatever the case, outside of myself. But if anyone's telling you to go long and hard right now to the moon, I think you probably should consider learning somewhere else. And then here's the reason why. 4 hour time frame, first of all, we got, again, a lot of confluence here in this range of 100 to 102. You can see 4 moving averages all hanging out right there in that range. Generally speaking, that's going to be a resistance type of range. While moving averages are not resistances or supports, they are trend setters, and we're under the trend. The trend is down. We don't take longs into that, okay? That's generally the concept. Take a look here, though. If we take a look at the RSI, we can recognize that we're getting closer to 50. Okay, that's generally a shift in momentum. A lot of times when you get above 50, you're in a much better place to take a trade. Okay, so we're getting close. I would say we close 99 to 100,000 or higher today. Slight possibility that will shift its dynamic, but we want to look at smaller time frames to identify if it's even worth taking a trade there. My guess is not, but we'll double check. Either way you look at it, for the most part, we're seeing a lot of convergence here, a lot of recovery here based on the news and the fundamentals being somewhat neutral and or the sky's not falling anymore, so people are buying again. But we're still under some key level resistances. So again, taking longs into that is generally irresponsible. Stochastic and money flow index are both pretty low. MACD's trying to converge, so this is letting us know a shift in momentum is happening. Keep in mind, we have a pretty significant bullish type of engulfing candle. There is, however, a fair value gap from this move up here. So we could see a retest that 96 to 97K range. So hypothetically, the price does one of these, and then it's off to the races. But between now and then, you do not breakout trade into a key level resistance. I don't know how many times I got to reiterate it in all my videos, but breakout traders are they have super low success rate, and they're going to be the only ones that are going to be bragging about how great they are. Just keep in mind. if anyone's bragging about a long position right now, I would be very careful. Okay, again, because those are high risk. Hindsight 2020, I added my spot bag. I added what? Solana, SCY, Dogecoin, and even some dogwood fat, right? I like a couple like little meme coins that are fairly strong, but for the most part, again, it's not really advantageous to consider a long just yet. Here's the reason why, at least on the hourly. Lagging span is getting close to getting free and clear of the price action. That's generally a favorable sign, right? That's somewhat of a breakout. However, the conversion line on the baseline being above, that's positive, but we're still under the cloud, right? And this to me is the most important one. It's kind of like a series of moving averages kind of letting us know where we're at. So hypothetically, this time tomorrow, we're still at roughly the same price action. It could be worth considering because obviously it would be like, working ourselves into a type of a wedge or ascending type of, triangle of some sort. And if that is the case, then it might be worthwhile taking it along. Between now and then, I would not recommend a long position. I'm still leaning a little bit more towards shorting at 100 to 102K. Again, it's tentative for the moment. I'm going to let things kind of calm down and breathe for a little while. It's just kind of how I am. I don't like to just jump right into the market when things get crazy. A lot of folks will find success with that, and that's good if that is you. But it's just too high a risk for me to want to consider, right? So at this point, no trade is probably the best trade. Now that this heavy liquidation level has been swept, further upside does make sense, but it also makes a tremendous amount more sense that the price action is going to reject out here soon with the price, coming up to its key level resistance range. So I'll identify all that in our Twitter, Telegram, and Discord posts. So if you're not familiar, I'm kind of looking like this here. I was kind of mentioning yesterday that we got a significant chance of the price coming down that 94K range. And again, 94.8 was the heaviest concentration liquidation. That's all gone now. So the general sense here is that we have less opposition, but for the most part, it's best to hang out and wait on the sidelines. Okay. All right. So that's where we're at. What are your thoughts? Why don't you comment below? Love to hear what you're considering with your Bitcoin trade if you are trading it, and love to hear it. Don't forget to like the video, comment below, subscribe, all that wonderful stuff. We'll look forward to seeing the next one. Have a great rest of your day. Take care.